So, welcome to today's episode. Today, I'm going to be doing my due diligence, which is what we all should be doing on stocks. I'm going to be checking today Tesco's. So, we're going to be looking at Tesco's. It's a supermarket, so it's consumer staples industry. It's basically a store in the UK where you can go get your groceries. They do have other products, like they have a bank. They have a bank you can sign up to. We're gonna find out. They do sell other products there. What is Tesco's? Let's find out. We already know, but according to Wikipedia, Tesco Plc, trading as Tesco's, is a British multinational grocery and general merchandise retailer headquartered in Wenwell Garden City, England. It's the third largest retailer in the world, measured by gross revenues, and the ninth largest in the world. Okay, cool. So we're going to take basically all this DD we're going to be doing, we're going to take all them facts, put it onto a Word document for now, and then maybe I might make a short video explaining it in like a very brief analysis, whether it's a good company, a bad company, and just give you all the facts. And that's all we want, facts. So let's put that down. It's the third largest retailer in the world measured by gross revenues, and the ninth in the world measured by revenues. Just realised I spelled Tesco's wrong. Alright, let's read the About section. Okay. As a leading retailer with over 400,000 colleagues, so they've got a lot of employees, that's for starts. We serve millions of customers every week in our stores and online. So you know they have a website online. Regarding the website, it's pretty much the same things that the store sells, just you can buy it online. So if you need your groceries delivered to your house, you can basically get delivered to your house. From a market store to the UK's biggest supermarket. Okay, cool. It started from a supermarket, like a market store. Let's read into that. 1919 and 1920s, made in London. Jack Cohen returns from war and starts a market store. Jack Cohen began selling surplus groceries from a store in the East End of London in 1919. He left the Royal Flying Corps at the end of Great War and used his demob money to buy the first day stock. From day one, Jack believed in putting affordable food in the reach of everybody. At the end of the first day, Jack Cohen made a profit of £1 on sales of £4. So that's not bad, you know. Profit of £1 on sales of £4. That's what, 25% of that is profit. But wait, is it 20? Yeah, it's 25%. Yeah. 25% of the gross revenues is profit, should I say. 1924, the name Tesco was born. The first own brand product sold, which Jack promised would bring amazing value, was Tesco Tea. Before the company was called Tesco, the name comes from the initials of T.E. Stockwell, who was a partner in the firm of tea suppliers, and code from Jack's surname. Okay, so the first product that they made, which was their own, like, you know, nowadays you may see Tesco brand biscuits, Tesco brand cola, Tesco brand tissues. Tesco brand is basically Tesco's own brand. Cool, the first thing they did was tea. 1929, first store. We're in 2021. It's almost 100 years since the first store. Not stand, or when a business first started, but first store. Jack Cohen opened the first Tesco store in Burnt Oak, Edgware, North London. So the first one came out in Edgware, which is really far up North London, almost to the point it's not London anymore, but it is still London. The store sold great value dry goods and the first ever branded product, which unsurprisingly was Tesco tea. Alright, so it's almost 100 years old. Getting there. I mean, give it another 8 more years, you'll know how old it is. Jack buys land and expands. 1940s self-service first. Cool. 1950s rapid expansion. 1960s putting our stamps on things. 1970s a decade of value at the tills and on pumps, but also the end of an era of founder. Yeah, so of course supermarkets, they put car parks, so people come with their cars, they can buy more stuff, it's more convenient for them, they can load up their car, van, whatever, with all their groceries. At the same time, by selling oil, well not oil, but like gas, as you Americans might call it, petrol over here, selling petrol or gas, that's probably another form of revenues that they make off people visiting their store. So a decade of value at the till and on pumps, but also the end of an era as our founder Jack Cohen passes away on 24th of March 19th. So look, some people say that when the CEO or founder of a brand dies, for instance, like let's say Apple with Steve Jobs, the brand doesn't survive. But as you can see, 1979, that was 50 years ago. No, sorry, apologies. Let's retract. So 42 years ago. It's been 42 years since this guy's passed away, and yet the business is still thriving. 1980s, checkout 82 cuts thousands of the price of customers. That's good. More competitive though, probably. 1990s, every little helps as Tesco goes global. Yeah, I'm gonna have to open a new tab. Let's see that. Hold on. Okay, see more just brings us. 1992, help at schools around the UK. Computers for schools was launched. Since 1992, the scheme has raised £185 million worth of equipment for schools around the UK. 185 million of equipment for schools. So basically Tesco started raising money for computers for school. That computer so ancient, as you can see. Remember, first computers didn't even have a mouse. Struggles. 1992, a new smaller font. Sorry, I don't know what's happening today. A new smaller format. The first Tesco Metro opened in Covent Garden. The new smaller format brought value into the heart of towns and cities. Tesco's would launch other formats, including Tesco's Express and Tesco's Extra. I don't know. Later in the decade, Extras brought news, homeware, and electrical goods to customers. The smaller format brought value into the hearts of towns and cities. 1993, the introduction of Tesco Value. Tesco Value launched, offering our customers a wider choice of products at great prices. You go to Tesco Value, they're selling spaghetti in tomato sauce. As you can see, it's very basic. Every Little Helps, 1993. The Every Little Helps strapline was launched. The new campaign attracted 1.3 million new customers between 1993 and 1995. 1.3 million new customers in 2 years. 1994, commitment at the checkouts. We became the first UK retailer to offer customers a service commitment at the checkouts through the One in Front initiative. Cutting the queue, the One in the Front policy has cut queues by 45%. I'm not gonna lie, I do not really understand what that's all about. I don't know. 1995, expanding our business. Expansion into Central Europe, with stores opening in Hungary. Within a decade, we opened stores in the Czech Republic, Slovakia, Poland, Ireland, Thailand, Malaysia, and entered India. So that's interesting to know. You'd think, Tesco's is British, Yeah, it started here, but it's expanded to Czech Republic, Slovakia, Poland, and then still in the UK. So yeah, Thailand and Malaysia. Like, they've gone around Europe and even entered Asia. Like, how would they think there's Tesco's in India? No, I want to see what that looks like. Give me a second. Tesco in India. I don't know if these things are still about. Tesco's has signed a deal to become the first foreign supermarket to enter India. It's $330 billion. Well, 300 billion pounds, $500 billion retail sector. The retailer has agreed to joint venture with the Trent Hypermarket Limited brackets THL, a unit of India's Tata Group, which runs the country's Star Bazaar chain. Okay, well, and that's, you know how like some places they are with the Western civilization, they don't really want them to come over and like touch their places. Okay, wow. Doesn't even look too far off. Yeah, I don't know if the rest, because they really look like they're in the UK. Yeah, that's definitely in the UK. I think that's the only one that we're going to get legitimate pictures of. Maybe that one as well, I don't know. Let's just check the ones in Poland. Maybe there's more pictures. Fair. But yeah, that's interesting to know. 1995, Tesco Club Card is launched. So basically, it's like a loyalty scheme, collect points. I think now it's like 1 point per pound. And so basically, when you get 100 points, that's like £1. So it's basically 1% back in the form of Club Card points. £1, 1 point, £100, 100 points, and 1 point is a penny. So yeah, it's basically 1% cash back, but you can only use it on a club card. Cool. I didn't realise that service was 1995. Things older than me. 1997, move into personal finance. Tesco personal finance launched. New saving accounts exceeded all expectations and over 300,000 applicants. Wow. Wow. So their banking service is actually almost what, 24 years? Yeah, 24 years old, wow. Tesco's Finest, we developed and launched our Finest range. So basically, you got Tesco's Basic or Tesco's Value, which is like, if you're on a budget or you're just looking for the dirt cheapest of whatever category it is, bread, water, milk, whatever, basic. You got the Finest, which is supposed to be the, but yeah, I still don't think the Finest is the best on the market, but it's better than their Basic if you have to be honest. 2000s, so this is the stuff that I would have been alive to see. Growth helps us bring better value to our customers. 2010s, putting the customers at the heart of everything. Cool. And that's it. And then it shows us a share price, which is down here. It is daytime while I'm recording this, and the UK markets are open, so this price may fluctuate. As you can see, that price is like 14 minutes old, so you can actually work out the time we're recording this, but that share price is 40 minutes old. Alright, cool. So we've got a little bit of Tesco's history. It's the third largest retailer in the world measured by gross revenues and the 9th largest in the world measured by revenues. So in America, you guys have like Costco, you have Target, you have Walmart being the biggest, which we have over here, which is called Asda, but we're sticking with Tesco's. Third largest retailer in the world measured by gross revenues. So that's just all the money coming in, nothing subtracted, just the money coming in. Third largest in the world. And the 9th largest in the world by revenues. Okay. I'm just going to find out what's the top 3. Top 3 retailers in the world. We're going to find out what's the top 3. Number 1 we got Walmart, number 2 we got Amazon, number 3 we got Costco, Walmart, Walgreens, okay. Tesco's now comes 8. I'm gonna double check that. So you want to get facts. Maybe the thing was outdated. Okay, revenue, Walmart, 534 billion, Amazon 321 billion, Costco 160 billion, Walgreens 130 billion, Kroger's 126 billion, Home Depot 112 billion, JD 84 billion, Tesco's 82 billion. Okay, so Tesco's is that's revenues though, and it did say, okay, so that's interesting to know. But revenues is actually 8th now, not 9th, 8th largest in the world. So, but when's this study been conducted? I don't know when this information. Oh, so I'm gonna change the information update. So according to this article, it's coming in at 8th place in the world. But let's type in, what was it? It was 3rd by gross revenues. Top 3 retailers in the world by gross revenues. Yeah, that information is definitely outdated then, because let's go through Wikipedia. Okay, on Wikipedia we've got different information. Tesco's is coming in at 10th according to this, but they agree that information about the revenue is 82 billion. The previous source listed was 82.6 billion revenue. This one says 82.7 billion in revenues, and net income is 1.7 billion. So, according to Wikipedia, it's 10th in the world by retail revenue. Interesting. Let me change the question from retailers to supermarkets, because I think stuff like Amazon shouldn't really be in there. Like, it's not selling food, and that's kind of what we're looking at. We're kind of looking at groceries. It's still going to give us the same information about retailers. But to this, Tesco's doesn't even come into it. Wow. And this is Forbes. Maybe we need to 2020. Let's put that. The world's largest grocery store chains. Okay. So many ads, so many pop-ups. Okay, Tesco's still to come here. So we've got in different answers from different websites. We've got in 10th, we've got in 9th, we've got in 8th. It's in the top 10. It's in the top 10. Let's see, no, actually let's make it specific to the UK actually. Top 5 supermarkets in the UK. Let's make it more specific. Okay, cool. Let's go with this. Statista. Looks like a website for statistics. Interesting. Sorry, just have to adjust my laptop. Most popular supermarket chains in the UK as of October 2020. Shares of respondents with positive opinions. So this is people just giving feedback, and this isn't like sales or anything. This is just people's opinions. Morrison's comes in at 80%, Lidl comes at 76%, Marks and Spencer's food comes at 75%, Aldi comes at 74%, Tesco's comes 5th at 73%, which is ahead of Asda by 72%, Tesco's Express, which is another Tesco's retailer but a different format, 69%, Sainsbury's 66%, the Cooperative Food 66%, and Iceland 65%. This is pretty much all the major UK supermarket chains, like you got all of them here. Tesco's does have another one called like Tesco's Metro, which isn't listed here, but it's, as you can see, these are its competitors. Personally, the main four that would be advertised is Tesco's, Asda, Sainsbury's and Lidl's. That's the main four. Even though if you look at this technically from people's positive feedback, you got Morrison's, Lidl's, Marks and Spencer's. Okay, cool. I'm just going to get a screenshot of this so we can remember this, that they need to improve their customer satisfaction, because their satisfaction is 33%. That's not bad, but it could be 100% a lot better. I mean, let's be realistic, 73%, that's basically 7 1/3. Sorry, yeah, 7 1/3 of a person walking out feeling satisfied. Not overwhelmed, just satisfied. And I feel like Tesco's can do a better job, like 80. It should be closer to 80%. It really should be closer to 80. I mean, when most people go to a supermarket or they're looking for a quick snack, most people think of Tesco's or Sainsbury's straight away. They're going to think, okay, I want to buy, I don't know, a pack of crisps, or I want to buy a drink. They're going to think, oh, let's go Tesco's. You want a sandwich? Tesco's. So Tesco's is actually kind of on people's minds, and I'm a bit surprised that it came in at 5th. I mean, Lidl's and Aldi, a lot of people are satisfied because it's very cheap. That's one thing to keep in mind. Lidl's and Aldi are very cheap and competitive. Like, you're really not going to beat their prices unless you're going to try and make a loss. But yeah, Morrison's, Marks and Spencer's is kind of targeted to people with more money to spend. So it's more like free range, vegan, healthy alternatives, better quality food, shall I say, better quality. Interesting. But that's not the answer. I'm gonna do it by sales. Let's see if this website gives us by sales. Okay. I don't know where the info. Alright. This website's a little bit weird. Like, all of this blank. Yeah, it's a weird website. Okay. Tesco announced that Mondelez ex-SVP of Finance Imran Nawaz will take over as CFO from April 2021. The current CFO, Alan Stewart, reports a 6.6% growth in sales in. Then it says you have to log in for more information. That's one thing we should keep out for, you know, changes of hierarchy in Tesco. So let's put that down. The current CFO, Alan Stewart, so that's the one that's currently, but that's that. Mondelez ex SVP of Finance. Imran Nawaz will take over. Cool, so Tesco is going to get a new CFO in April 2021. I mean, sometimes changes are positive, you know, in with the new, out with the old. Maybe that might make a difference to the business. Let's see what other information we can dig out. Let's see, according to this website. The most popular supermarket chains in the UK. You have to remember, the UK isn't just London, it's actually England, it's Scotland, it's Wales, it's part of Ireland. Like, most people just think about London, so we need to actually think of people outside of London. Aldi, first, Tesco's the second most popular and the third most famous. So apparently second most popular and the third most famous, according to YouGov. Behind you got Morrison, Marks and Spencer's, Lidl, Sainsbury's, Asda, Iceland, and Tesco. Okay, one thing we can see that's common theme is Iceland comes towards the end of the list, which I fully agree with. It really isn't somewhere you go shopping for. Let's look at our Wikipedia page. Let's see how many stores Tesco's. Actually, let's order it for a number of stores. Okay, if we're going by number, wow, Co-op has 4,000. When is this dated though? When is this dated? Because you don't want information that's outdated. Just trying to see where this news article. This page was last edited 30th of January 2021 at 1:09 UTC. Okay, cool. So this is only about what, a month old and a week, if that, really. Okay, cool. So you know this information isn't told. Co-op comes first with 4,022 stores, and Tesco's has 3,443. Now, the gap between that is like 20%. That is that. Co-op has 20% more stores than Tesco's, but I want you to see how much Tesco's has compared to the rest of the competitors. 3,443 stores. Sainsbury's is less than half of that. Less than half. For every Sainsbury's there's 2 Tesco's and a bit. Think of that. Every Tesco's there's 2 Sainsbury's. So for every Sainsbury's there's 2 Tesco's. And then you compare it to like other markets, you got Iceland, 994, 3-1. Marks and Spencer's, that's what, 4-1 at that point, 852. Aldi, 830, Lidl, 760, Asda, 603, which is basically your guys of Walmart. Morrison's, 542, Waitrose, 304. At this point it's just a joke, it's like a couple hundred really. And you got ORCA, which is like a new online service, which might be worth looking into another time. But yeah, wow. So that puts it in perspective. It's the second. I'm gonna get a screenshot of this list of supermarket chains, print screen. I think that's quite interesting, you know, to think that Sainsbury's and Tesco's are kind of like here and here in terms of popularity, products, price range. I mean, I've personally shopped in both of them. Do I prefer one more than the other? Not really, but I would think of using a Tesco's before Sainsbury's, not gonna lie. I think that's more to do with brand image and recognizability than the actual products, because they're pretty much more or less the same. It's identical. Okay, so I think that we just found, the thing we just found out now, that's just amazing, you know, to know that there's so much more stores of Tesco's than the majority of its competitors. So that's interesting. So the types of stores they have is Tesco's Extra, Tesco Superstores, Tesco Metro, Tesco Express, Jack's, One Stop and Premier. Premier shops are independently owned stores operating under the Premier symbol, owned by Tesco Plc, acquired with the purchase of ORCA Group. Okay. Cool. So we know how many stores they got. Top. Let's change it by revenues. That's what we really want. We want to find about Tesco's revenues specifically, but I want to see it compared. Because if you get this number, there's no point having a number if you can't compare it to anything. Okay, cool. This looks like what we want. Okay, 2012 to 2020 August. So it's like the last 8-9 years. Apologies for doing this. I got earphones in with music to make this more fun. Alright, cool. So down here you got your color codes. You know what the hell it is. Tesco's. It's this light blue shade. Makes sense. Why? Because Tesco's is blue and red. They're branded with a bit of white. Market shares of total grocers. As you can see, Tesco's pretty much fucking dominates it. Year on year, Tesco's dominates it. But as you can see, as the years have been going on, it's slowly been declining from 30.9%, 30.2, 28.8, 28.3, all the way down to 26.6. So 30 down to 26, that's what, like 10% decrease in terms of market shares of grocery stores in the group. So as you can see, they have a crazy amount of stores. We've already found out they had 3,443 stores. I think that was the number at least. And the numbers have been declining over the years in terms of percentage wise, not the actual stores, but percentage wise. We can look into how many stores they keep building per year. We'll find that information out. This is really irritating. But yeah, as you can see, let's look at this. Sainsbury's has been a bit stagnant around that 15, yeah. So 14.9% is lowest and 16.4% is highest. Asda started at 17.5 and it's at 14.3. One of these has grown. We need to find out what the hell's grown. So Morrison started at 11.5 and finished at 10.2. Okay. Green. Aldi 3%. Okay. So what we've learned is Aldi's actually coming to dominate in terms of they want more of the market shares in the UK. So going from 3% to 7.6%, they've more than doubled the amount of stores they have in the UK. More than double. So they're definitely investing a lot of money into gaining more market share of the grocery companies in the UK. Co-op started at 6.8 and it finished at 7.1. Co-op, probably Co-op's been making more stores as well. I mean, it's at 7.1% now. So looks like Co-op has been building a couple stores. Let's see what's in purple. Lidl's 2.8%. Now it's at 5.9. So I think the main two competitors Tesco's need to watch out for is Lidl's and Aldi. They've both increased their grocery stores in Great Britain from August 2012 to August 2020 by double. So I'm going to put that down. I'm going to write that down. So Aldi and Lidl's has both increased market shares of grocery stores in Great Britain from August 2012 to August 2020 by double. So that's something we need to remember, because you always need to remember the pros and the cons. So we need to know what their competition is as well. Waitrose started at 4.6% and Waitrose has finished at 4.7%. So it's pretty much maintained the same. They probably made a few stores, probably got rid of a few stores. Who knows? Iceland started 2% and Iceland finished at 2.4%. So it's gone up a bit, but Iceland isn't one of them places that, like I said, I don't think people really. I don't really think people really shop at that place. And they've got other multiples which gone from 1.9 to 1.9. That's not changing anything. But you can see there's a new section that's blank that just boop. You got Ocado, which is 1.2%, which has become 1.8%. Does Ocado even have physical stores? Because I'm pretty sure it doesn't. It's just a website. Does Ocado have physical stores. Ocado Retail Limited, or Ocado.com, is Ocado's Group British retail partner and is an online supermarket that uses Ocado Group technology. In contrast to its main competitors, the company has no chains of stores and does all home deliveries from its warehouses. So Ocado has warehouses and it doesn't have a single store, which is kind of the way to move forward. So that's one thing I write down as well to remember. Ocado has no store. Because if you want to look at majority of the top players in the industry, Amazon doesn't have a store. Amazon has warehouses and ships products. So they only really have to pay on the land on the warehouse, whether that's rent or to buy the land or whatever. But they don't have shops. They don't have like physical branches. Ocado, by not having a physical shop, they might have less brand awareness because you're not going to see an Ocado. You might see a van, which I have seen a couple of them doing deliveries around the area, but it's not essentially paying rent, which is kind of what majority of businesses need to start realizing, is that they need to start going onto online, especially with technology nowadays. I mean, right now I'm not joking, I have 5 screens I can see. This laptop, a monitor screen, and 3 phones here. That's the world we're moving to, where our lives are going to be constantly behind a screen. So I think that with Tesco having so much stores, they might want to start getting rid of stores. The amount of stores they have is amazing. They can probably get a lot of revenue, but think of the rent that not all of them stores are profitable. 100%, not all of them. There's stores that they probably make losses on, but it's just to make sure that the customers in those areas have that Tesco's experience and that they're not losing chances on to make money. Even if they're making a loss, they don't want that money going to their competitors. Because there's probably stores that, like I said once again, are not profitable, but then with all the stores they have, they can make a profit in general. But yeah, Tesco's is a brick and mortar store. They do sell online products, like I said. You do your groceries and whatnot, but they should look into online stuff. I think that was interesting, to look at. Let's get this. Can I download this as a picture? Nope. Okay, no worries. It's okay. I'm gonna take a screenshot of this anyway. Print screen. Just give me a moment, people. We're saving information. So okay, that was a mistake. Apologies for that, guys. Just trying to get this information down. Okay. Let's read this. Supermarket. Okay, I don't care about that. Supermarkets in the UK trends 2016 to 2021. Okay, all of this information has been locked up. Amazing, amazing. We love websites, don't like do that. We love websites that hide public information. Alright, okay, let's just look at this site. Okay, that's the same Wikipedia page we was on before. Tesco's, how many stores have they built? Because I want to see over the years. Okay. Oh no, that's worldwide. interesting to know how much they have worldwide, but then there's different competitors in different countries. I kind of want to know how many have they in the UK. Alright, let's check this. Our business in the UK is one of the largest retailers with over 450,000 colleagues. We serve millions, yeah, we know that. 6,800 shops around the world, over 79 million shopping trips every week. That's a good number, you know. That's actually a good number. Operations in the UK and Ireland are the largest within the group, over 3,700 stores. Wait, in the UK, cool, that's not what we wanted. Operations in the UK and Ireland are the largest within the group, with over 3,700 stores. Okay, I don't know, when's this been updated? The website says 2021, so we can change the information now, so we know it's 3,700 stores over, probably like 20 over, but yeah, whatever. And 3,000 colleagues. We have strengthened the foundation of the UK business. Okay, cool, whatever. Don't worry, we're gonna read like the annual revenues. Just trying to find some information that's not on their website. Let me type in UK. Because I don't want to piss. Yes, this is what we wanted. Thank you. Number of Tesco's in the UK. See, you gotta dig for your information. The information ain't gonna come to you. You gotta dig for it. Alright, cool. So from 2012, there was 3,116 stores. 2013, 3,288 stores. 2014, 3,524 stores. 2015, 3,710 stores. 3,743 stores. 3,739 stores 2017. 3,952 stores 2018 and 2019. 3,961. 2020, 3,968. Okay, cool. I mean, as you can see, there's starting to stay a bit stagnant. That's what I'm noticing. Alright, let's look from 2012 to 2014. You can see drastic increases. You can see that's an extra 160 odd stores, whatever. And then over here, you are like almost double of what they opened. And now they've opened like 200 and almost 240 stores. 236 stores. Then the next year they've opened 186 stores. So from 2012 to 2015, they've been smashing out stores. Then at 2016, this is where you can see it's going to be flat. Like, they opened 33 stores. Then the next year they actually closed 4 stores. They may have opened more stores and closed some stores, but net-wise, they closed 4 stores that year, net-wise. Then 2017, they opened an extra 213 stores, and then over 2018 to now, it's just been stuck around that 3,900 mid-range. So they opened 9 stores the next year, and then the year after that they opened 7 stores. Like, they're not opening like 100 or 200 stores. So it's starting now to go stagnant. You can see it's been flat almost, like 2015 to 2017 pretty much flat, and 2018 to 2020 flat. 2017 to 2018 was the last big increase, and before that it was from 2012 to 2014. Sorry, 2012 to 2015, they built a lot of stores, and 2017 to 2018. But from 2015 to 2017 and 2018 to 2020, it's pretty much been flat. So over the last 6 years, there's only 1 year where they actually built a lot of stores. So Maybe they're not going crazy on building stores. Just gonna save that. Every little piece of information is just you need to see it like this. Every piece of information is like a piece of a puzzle, like a jigsaw. The more pieces you have, the easier it is to do it. So you don't always just go for the corners and the edges, which makes it easier to find a frame. You go for every piece. Even right now, if I'm finding the middle piece of the puzzle, which might not be relevant now, but might be relevant later, it's better to have that information. Okay, cool. So that's what we wanted. We want to know how many stores specifically to the UK. Yeah, 7,800 in the world, which basically means only half their stores are in the UK, which is kind of interesting. Because I feel like most of the revenues probably does come from the UK, but we don't know that for a fact, so I'm not going to say that. So you know how many stores? Now we're looking at revenues. Revenues. Haha. Alright. This is interesting. People also search. You can see what it's on compared to. In oh god, no, it's different years. Okay, compare Tesco's 2019 to Sainsbury's 2019. Tesco's revenue was 63.91 billion, and then Sainsbury's was 29.01 billion. So Tesco's revenues was like 2.5 times more than that. Well, not 2.5, a little bit less, but yeah. Let's see on. Oh, there we go. 5-year record. I think we need to see longer than 5 years, but 5 years can do it better. Oh, you can move it over. Cool. Hold on. Yeah, we're not going to be moving sites. View as download. Yeah, we're going to download it. I'm going to download it and open this. Let's go. I think the reason I want to show the last 5 years, because the last 10 years is probably what makes the last 5 years look like shit, being honest. But let's go over the last 5 years. If you find something for the last 10 years. The statistics below reflect the latest published information for financial years prior to 2020. These figures represent the comparatives from the following year's financial statements, except figures for 2019 and 2018, which have been restated for IFRS 16 leases and IFRS 15 revenue from contracts with customers respectively. See below. 2018 figures have not been restated for IFRS 16. Korea was first classified as a discontinued operation during the 2016 financial year, and Turkey during 2017. In respect of the discontinued operation in Turkey, 2016 statistics have been represented to be consistent with 2017. During the 2018 financial year, the group reassessed its reportable segments and determined that the retailing and associated activities previously disclosed within the international segment should be disintegrated into Central Europe and Asia segments. Refer to note 2. The group redefined. Whoops. Come on. The group redefined profits APM during 2019 to exclude the amortization of acquired intangibles. Historical data for redefined measures have not been restated as the impact is not considered material. The group adopted IFRS 9 financial instruments and IFRS 15 during the 2019 financial year, neither of which had a material impact on the group's performance. The financial data of the 2018 financial year has been restated for IFRS 15. The group adopted the IFRS 16 during the 2020 financial year. Refer to notes 1 and 37 for details. Figures for 2019 have restated, but prior historical data has not. Refer to note 1 and the glossary for the full list of APMs and their definitions, as well as changes to APMs. Okay, cool. Alright, so we got 2016. Oh, jeez. Sorry about that. So 2016 to 2020. Alright, let's go for sales. In UK and Republic of Ireland, not return on investment, Republic of Ireland that means, 37,000, sorry, well I said million, so 37 billion, 37.1 billion, 37.6 billion, 38.6 billion, 44.8 billion and 45. Alright, remember the previous graph we had? I'm just going to try and open that up. The screenshot's kind of really bad. Yep, it adds, wait. Yeah, it adds up guys, it adds up. Well not really, but I can hold on. Alright, so you remember on the previous graph I showed you where I talked about the number of stores in the UK and Republic of Ireland, and it went from 2017 3,700 or something to 2018 3,952, which is like almost a 200 or more than 200 store increase. 2017 to 2018. You look at 2017 to 2018 of revenue, there wasn't a jump. But between 2018 and 2019, there was a big jump. So when you see how many more stores they made in 2018, they had more stores. So in 2017 there was building the stores, if I'm right, was it? No, hold on. Give me a moment to process this. Yeah, so in 2018 they were building the stores, and then you can see it reflect in 2019 by their revenues. So when they built more stores in actually I'm gonna take this one out. In 20 no, I'm gonna put it back in. So in 2018 they had an extra 200 stores, and in 2018 to 2019 you can see the revenues went up a lot. Let's work out what that is percentage wise change. Yeah, I got music playing in the background, you can see that. Google percentage calculate, increase calculate, there we go. Alright, so starting value we're looking at 38656 and 44883 calculate. So that's a 16.1% increase. Alright, so just by them making an extra 200 stores, so, increase in stores wise it was less than 10%. We're talking like 7%. You guys can do the numbers, I'm giving you. But yeah, literally their revenues went up by 16.1%. I think that's quite good. I think that's quite good. Considering how many competitors there are in the UK, as the Sainsbury's, Lidl's, Morrison's, Waitrose, Iceland, Ocado, there's loads of competitors, but they made more stores and they've increased their revenues, which is good, isn't it? So that went up by, I'm going to write that, the 16.1%, where's the percentage symbol on the computer? Percent increase. Okay, the size is massive. Let's make, why does it not want to, okay, whatever. Let's make it a bit smaller. That's it. From there to there. That's good. And then another increase of like 0.9 billion in 2020 in sales. Whether that's the final answer, who knows? Who knows if they're going to restate it or change the answer. Central Europe, you can see the numbers. Ooh, that's not good. That is not good. I'm going to put that in red so you guys can remember that. Let me make a color coordinate here, actually. As you can see, Central Europe. So they're 2019 to 2020, their sales in Central Europe, which is like, you remember Poland, Czech Republic, it went down like almost 20%. Hold on. let's see if we can use this increase calculator to decrease calculator. Hopefully it'll just give me a minus figure. So you get 6,030 and 5,332. Calculate. So it's a decrease of 11.5%. Now that's not good. Losing 10% or more. Like that's really not good. I'm gonna put that down as like 11. Was it 11 point? 11.5. So I'm going to put that 5% because it's almost 11.6% at that point. Decrease. That's not good. Maybe they made less stores or started removing products. I don't know, but we were just going off the face value of numbers. We can see that's not good. That's really good. That's good. And Asia, it went up from 4.4 billion to 5.1 billion between 2016 and 2017. That's really good. But then ever since 2017, it started declining. So actually, let me put that in. Yeah, we're going to change that over to like a. It's not concerning, well, it's not crazy concerning. So I'll give it orange. It's a little bit concerning. But then from here, 2019, they did something changed, and I went back up to 5.2 billion, which is the most they've had in Asia. Tesco's, like I said, it has a bank. Do I use it? No. Would I use it? No. Why? Because it's not a financial instrument that you just want to use. Like, I would want to use Barclays, Lloyds. Well, I wouldn't use Barclays, but I would want to use Barclays, Lloyds, NatWest, RSBs. Not a supermarket bank. No offense to Tesco's. So as you can see, the revenues, 955 million. On 2017, they touched a billion. So that's something to remember. 2017, they touched a billion in revenue from 2017. That's not too bad, you know, actually. They touched a billion then. And it went up and then it went down here. But it went down so significant. It's not, what's that? It's like 2-3%. I'm still gonna put that down in red, right? Because it's a decrease. I think we should do that for the rest of it. Actually, being honest. Gonna put this in. Let me not put this in red because it's already in red. I'm gonna put this in like a. Give me a guys. I'm gonna adjust the colors. One second. I'm gonna change this one to like an orange because that was a bit alarming. But that was really worrying. Let's change the font. Let's just change it to black for now. But yeah, I'm down. Cool. Let's just look at group sales. So if you put all of these year on year, let's see. 47.8 billion, 49.8 billion, 50.9 billion, 56. So overall, it's green. Overall, it's green. But the major green is this year. Let's look at. So we need to remember this year. That was when we saw the biggest change, 2018. So in 2018 to 2019. Like I said, in 2018 they had more stores. So, yeah. By 2019, they made what, 10% more in group sales. I think that's good. Well, it's a little bit more than 10%, but I'm just gonna put 10% plus. Can I find the plus button on the keyboard? Yes, I can. 10% plus. Increase. Am I doing this the most efficient way? No. But DD is diligence, so it doesn't matter how you do it, it's your own way of doing things. Alright, cool. So it's good to see that Tesco's is growing their revenues. That's good. Tesco Bank is growing their revenue. Tesco Bank is growing their revenues, but 2019 to 2020 declined, but who knows, that 2020 number might be restated. In Asia, their business was way. I mean, you can see after 2017 it dipped. It dipped for 2 years and recovered on the third year to all-time highs. Central Europe, 2018 was the last good year, all-time high, and then you can see that 2019 it went down by 5%, and then on 2020 it's been down 11%. So from 2018 to 2020, what's that? Almost, it's gone down 1,000. Yeah, it's over like almost like 15, 16, something like that, 15-16%. UK and this is really getting irritating, guys. I apologise for that. DCFMs, they're not the best. UK and Republic of Ireland, you can see that it's pretty much gone up all. So I'm gonna put that as UK and Republic of Ireland sales positive. Central Europe, I worry about that. It's a cause of concern. Like it's a cause of concern. The last few years it hasn't been great. Asia, I say it's a slight cause of concern. Not crazy, it's a slight cause of concern. Tesco Bank is solid. I think it hasn't been positive year on year, but it's solid. It's grown the last 5 years. It's only had a dip for 1 year, and hopefully that will resume into 2021. And gross sales is really positive. So what I'm saying is they need to do something quick with Central Europe, because that is costing them money. If they're losing revenue, so it's not the best. Maybe it's because they got rid of stores. We don't really know the bigger picture yet, but UK and Republic of Ireland, solid for revenue. Tesco Bank is getting there for revenue. Asia, they need to keep an eye on, and Central Europe, they need to keep an eye on what their revenues are and what they can do to increase it. Alright, cool. Alright. Okay, that's financial statistics. My bad, apologies. These are revenues. Apologies for that. Sorry, no, that was sales. These are revenues. So from sales, now we're going to apologies for that, guys. I should have read that. Cool. You're looking at sales. The sales in UK and Republic of Ireland has gone up year on year, but like I said, 2018 to 2019 has really been a good year for Tesco's. The last thing you want to do is look at stock chart. You don't look at stock chart first. Also, my battery soon will die, so there will be like a little break. 43,000, well, it's in billion, should I say, 43 billion, 43.5 billion, 44 point, even that, I mean, that's only an increase of like what, a little bit less than 500 mil, but increase is an increase, isn't it? But that, 2018 to 2019, they did something amazing there. Overall, it's gone up, what, in the last 5 years, it's gone up 4,000, it's gone up over 10% in the last 5 years. Year on year, that's like 2-point-something%. But majority of their increase was from 2018 to 2019. So I'll give that a solid green. Central Europe to Asia, that's an amazing increase from 2015 to 2016. That's good. Another great increase actually over here from 2016 to 2017. But then you can see from then it's just been downhill, like from this this has literally just been a joke in terms of declining revenues. It's gone down a lot. Really, it really has gone down a lot. They've lost a whole billion in revenues. Percentage wise, what, that's going to be like 8%, but that's a lot to lose, a whole billion. Like I said, I think that's really a cause for concern. Alright guys, there's going to be a little gap here, it might be a little bit weird. I'm going to start recording on a different device. Alright, so I'm back. You can see different camera, this is my phone. Might be better, might be worse, put in the comment section. Camera 1, camera 2, what do you prefer? So yeah, I was looking at Asia, their revenues. We've got 4.4 billion to 5.1 billion. That's a good increase. That's like what, 15, yeah, like 15, almost close to 20, but between 15-20% increase, that's good. And like I said, after that, from 2016 to 2019, you can see it's been on a decline, but then they posted their best year in 2020. So it's not consistent, it's kind of all over the place, but average out over the years, it's gone up, what, 10, almost 15%? No, actually I'm close now, I'm almost 20%, what am I saying? Over the 5-year period, actually, no, I'm going to change it, I'm going to change it to light green. But yeah, like I said, Europe is a little bit concerned that the last 3 years have been just a decline. We've got Tesco Bank. Tesco Bank, as you can see, is increased year on year except for 2020, but that could be restated. I think Tesco Bank is quite solid in terms of a source of revenue for them. I'm gonna put green. It's gone up from 955 million and it touched a billion on 2017. So that's their first year where they hit a billion in revenues. You can go for group revenues. 53, 55, 57, 63, 64. So group revenues has been going up year on year. As you can see, 2018 to 2019, an amazing year. Alright, UK and Republic of Ireland, operating pros/loss with exceptional items and amortization of acquirable intangibles. Alright. I'm going to do a quick Google search. What is acquirable? My spelling is terrible. There we go. Tangibles. Oh, yeah, I'm telling you my tips. What's the meaning of non-tangible? Incapable of being touched, not perceptible to touch. Okay, cool. Non-tangible. Okay, cool. Profit or loss, and once again, this is still in millions. So remember the billions of revenues they're making. 53 billion. I want you to remember 53 billion they're making. This is 2016. They keep less than 1%. And 1% is operating profit. 1%. Then the year after that increase, finally, look at that. That's a big increase. From 503 mil to 803 mil. Big increase. Cool. Good year. Then we got from 2017 to 2018, increased by 200, and this is the first year they touched $1 billion in profit. $1 billion in profit. Cool. Good year. 2018 to 2019, almost doubled. Look at that, amazing, good year. And then there they've increased it again, more than 10%, almost what? More than 20, yeah, more than 20% actually. Yeah, no, good year. Solid. UK, they can't really change too much. The UK and Republic of Ireland, I say their customer base is good. Let's look at Central Europe, which I said is the one we should cause. Let's take a course. 2016 to 2017, it halved. That's not good news. That's really not good news. Actually, you know what? That's actually bad news. Let's be real. Half. Especially the fact, if you look at it, their revenues went up, but their profits went down by half. Does that really make sense? Maybe they're just cutting costs. Who knows? Well, cutting on profits, that's for sure. Then they doubled it. I don't know. I wouldn't really call that a good year for your first year. They did better. We'll say they did better, so it's a good year. But from there to there, it's more than 10% increase. That is a really good year. Like I said, it's 2017 to 2018. Tesco's did something amazing with their business. You can see, look at that, almost doubled, amazing. And then 2020 has been restated, whatever, but they've lost like what, 25%, a little bit over 25%. That's not good. That's not good. Alright, let's look at Asia. Funny enough, Asia's actually green alright. Oh yeah, look at that. 218 million, 262 million, 299 million, 390 million, 420. You know what? I'm gonna change that. So it looks like, I'm gonna say that Asia is slightly all over the place with their revenues. In terms of profits, their profits are actually alright. Like Asia's profits is like steadily growing. It's not bad. So it looks like Central Europe is actually more of a Central Europe is a concern. Tesco's might need to drop off their stores there. Like it seems like it's holding them back, or make some sort of improvement. Tesco's Bank. So remember, which year was it they hit? Yeah, Tesco's Bank, they hit $1 billion in revenue in 2017. Yeah, 2017 they hit $1 billion in revenues. So let's look. Funny enough, between 2016 to 2017, it went down by like 5 mil. Okay. Nothing too crazy for concern, but it's not good. Then when it hit a bill, it went up close to 10%. That's a good year. That's a really good year. 169 million to 199 million in profit, and then the profit went down by 6 mil. Not too much concern there, but still, I think that's still okay. The Tesco Bank business, I think it's a good business they have. Group operating profit before exceptional items. Alright, so this is everything included. Alright, let's go. 985 million, 1.2, 1.6, 2.6, and 3. You can see year on year as a group, it's all growing. Sorry. You can see the worst year was 2016 to 2017. Like, you got Tesco Bank going down, you got Central Europe, their profit going down by half. UK and Republic of Ireland was amazing that year, and Asia was quite good as well. But Tesco Bank going down, and especially Central Europe, just 50 mil. Almost 50 mil, that's a fair bit. Anyway, is these percentage figures for what we need? Nope. Something else cool. But yeah, look, 985 mil, 1.2 bill, 1.6 bill. This 2018 to 2019 year, really, like, I keep going back to it, I'm telling you, 2018 to 2019, Tesco's really did something with their business. Like, look at that. And then, again, 2019 to 2020, good. I'm just going to write a note on the side that 2018 to 2019, amazing, yeah. Alright, cool. Operating profit or loss, yeah. Profit or loss. Alright, cool. UK Republic and Ireland, so what, 597 down to 500. That's more than 10%, that's a bit of concern. But then they doubled it, look at that. 2017 to 2018. Amazing. And they hit $1 billion. That's good. $1 billion in profit. Then again, 27. It's 2018 to 2019 years, really amazing for them. And then 2020 it went down by what, like 5 mil. It's not even a percent. Nothing to cause for concern. Still a good year. I say overall, good. Central Europe, as you can see, operating profit / loss going up, and then look at that major drop off, 275 mil to 85 mil. What's that like? No, we need to actually work that one out because that's not good. 279.85. 279 and 85. 69.53. That's really bad. 69.5% decrease. It was all good until 2019 to 2020 in Central Europe. I'm gonna give it a yellow. Because that figure is lower than 2016 by like even a significant amount, like 20-30%. Asia, we've got 203 mil, 231 mil, 277 mil. Then afterwards it went down by a bit, but almost, look at that, 252 mil to 415 mil, 2019. I think 2018 to 2019 in Asia wasn't that great, and the same for Europe. But yeah, 2019 to 2020, that's really good. Overall, I say it's quite good. It's gone up over the 5 years, over 100%. So yeah, cool. Tesco's bank. Alright, Tesco's bank, you can see it's just going down. It's really going down. I'm not even gonna look. 161, down to 77, up to 145, down to 169, down to 34. So the operating profit is really going down significantly. I mean, that's gone down more than 50%. That's a cause of concern. That's really a cause of concern. That's a bad year. That's a good year. Another good year. And then another bad year for concern. If you look at group profit, you can see it's gone down, what, 4%? Not that bad, but not good. 2017 to 2018, really good year. 1 bill to 1.8 bill. And then 2018 to 2019, as you can see, is a common pattern. It really was good for them in like so many aspects. And then 2019 to 2020, 2.5 bills has gone down a bit, but not too much. Share of post-tax profit losses or joint ventures and associates. Net finance costs. So of course, their finances, of course, it's going to go up and up. As you can see, it's gone from 849 mil up to 1.2 billion. What's that, like a 40% increase. Now we are profit / loss before tax. That's really gone up. That's really gone up. That's good. That's good. Like, it's gone up over 600%. That's amazing. Look at that. So it went down. Of course, you can see here. It went down like at 25%. That's not good. That's not good. 2017 cause of concern. 2018 they turned things around. Just 2019 another good year, and 2020 went down by about 15-20%. Not good. You can see that taxes of course goes up. You know, the more money you make, the more you're gonna pay taxes, unless you find ways that you can spend your money and avoid taxation. 54 mil to 380 mil. From 2017 to 2018, it paid so much more in taxes. So much more taxes. That's not good. They've somehow gone from paying 87 million to 306 million. I don't know how they made that much of a jump, but yeah. Profit / loss for the year from continuing operations. Profit or loss. So as you can see, 256 mil down to 58 mil. That's like what? Almost an 80% drop. Yeah, that's not good. That's not good. That's really bad. But you can see it's gone up to 994 million, which is a lot. Now that's a crazy turnaround. And 2018 to 2019, another good year. 2020, not so great. Discontinued operations, don't care. Profit or loss for the year. Cool. Profit or loss for the year, we got 129 mil, which went down to 54. So they lost like more than 50%. That's not good. But for some reason, somehow, profit, they've gone from 129 million in 2016 to 2018, increasing that figure by 1,000%. Now think of that, 1,000%. 1,000%. That's £1 turning into £10. That's £100 becoming £1,000, 100,000 becoming £1 million. Like that 2016 to 2018. 2018, that's actually amazing. That's great results. 2018 to 2019, another good year. Then 2020, not so great. Not so good. Owner of the parents, non-controlling interests. You can see the interest 2 mil, 14 mil, 9 mil. Interest rates went down, innit? You can see that. Profit before taxes, exceptional, other financial statistics, diluted dividends per share. Okay, so you can. Okay, that's interesting actually. We kind of need to pay attention to that. Alright, dividends. What are dividends? Dividends is basically a percentage of a company's profits paid out to shareholders on an annual basis, biannual basis, quarterly basis. And if it's like a REIT, which is real estate investment trust, that might be a monthly basis. So once a year, twice a year, 4 times a year, or every month. That's how companies going to pay out. As you can see, in 2016, 2017, they didn't pay dividends from this. They didn't pay dividends. 2018, 2019, 2020, they did pay dividends. I'm just going to double check this information for another site. I just want to be sure I'm telling you the right information. Tesco dividends, dividend history. Let's look at that, dividend history. Alright, first, okay, market data not available. Amazing. Thank you. Next website. So it has been paying out dividends. Interesting. And what's this information about? Maybe I'm misinterpreting it. Actually, wait. No, maybe I'm right. Yeah, 2016, 2017. 2016, 2017, they didn't pay dividends. Shit. As you can see, look, we've got this price chart which I'm going to save. Paying dividends is good for shareholders because one, they're seeing a bit of return from their original investment in the form of, 3%, 8%, whatever. But then they can reinvest it back into the company for more equity, or they can put it on use them in cash, put it into another investment. But if you look at this chart, from the year 2000 to 2014, 14 years consecutively growing the dividend. Now, unless your company has continuously grown your revenues, growing your net profit, gross profit, you're continuously growing. That's going to kill off your business at one point. And look at that. We scroll down to here, Q2 2012 to Q2 2014. It's pretty much been stagnant and not growing. And then 2014 to 2015, they cut it like crazy. That's like an 8% cut there. 2016, 2017, they didn't even pay a dividend. 2018, 2019, 2020, they reintroduced it, and you can see the growth has gone up a lot. So who knows? 2021, maybe expect a fat dividend coming through, like big dividend coming through. Who knows? Especially we've just had a pandemic. More people have been shopping more than ever. People have been shopping because they've got nothing to do. Some people have been literally just been blowing out money on food. So yeah, and you can see here dividend breakdown. This gives you specific numbers: the interim, a final, TBC to be confirmed. As you can see, was it like 2018 1p, 1.67p, 2.65p, 3.2p. The final dividend is a little bit more than that. As you can see, it's 2p, 4.10p, 6.5p. So from what I'm seeing, we might be able to expect a final dividend in this year, 2021, but maybe, I don't know, 8p, 8.5p. There was a special dividend which is, look at that, 50.93 pence. I don't know if that's already come out, or yeah, if it has, that's ridiculous, considering the stock price is what, £2 something, and you got a 25% return on your investment. 25%. Second, so what's this, February 2021 year, and 50.93 pence special dividend was accompanied by a 15/19 share consolidation. So I did a share consolidation recently. So you got dilution and consolidation. We're just going to give you a definition. What is a share consolidation? Definition. Alright. Oh, sorry, stock split is the opposite to consolidation. Also known as reverse stock split, a reduction in the number of issued and outstanding shares that increases a shareholder's per share value proportionally. Consolidations are mostly commonly used by public corporations, particularly when a corporation's share price is falling and it wants to prevent a delisting of its shares or attract more investors. Under the theory that increasing the per share price is attractive to investors, after a share consolidation, a current shareholder holds fewer shares, but each share is proportionally worth more. As a result, share consolidations do not change the aggregated value of what shareholders own or the overall market cap of a corporation. For example, if a corporation shares are traded at $1 a share and a corporation declares a 1 for 10 share consolidation, every 10 outstanding shares held by a shareholder becomes 1 share of value of 10. To make this more simple, share consolidation. You have a slice of pizza, there's 10 slices. You have 1 slice, you have 1/10 of the pizza. Share consolidation is now 1 for 2. That pizza doesn't have 10 slices, it now has 5 slices, and you're holding 1/5. But that one piece isn't one piece of the 10th, it's one of the 5th. So basically, you now have 2 slices of pizza, which is, well, 2 of the old slices of pizza, which is now the new size of 1. So you still have the same amount, but it looks like you have more, but really, in reality, you have the same amount. It's the same amount. I mean, it makes it look like it's worth more. Is it good or bad? It has no negative impact on share consolidation, reduces all the shares held by the shareholders, and when every shareholder gets affected, no one loses out. No doubt the number of shares is lesser, but the percentage of ownership and value of investment will remain the same. There you go. So if there's 1 million shares in a company and you're trying to buy as much as possible, the shares doesn't become more cheap or more expensive. It's exactly the same. You're just having to get less shares, but you're paying the same price as you would have paid before. So it's not really too much of a difference. It's just the opposite of a stock split, really. Alright, so dividends was correct. 2016 and 2017 they didn't pay dividend. 2018 3 pence, 2019 5 pence, 2020 9.7. You know what? For the investor, that's good. That's good. You've seen the dividends go up year on year. 9 pence. Cash generated from retail operating activities. So that's basically from Tesco's, like the retail operating. 3.5 bill, 2.2 bill, 2.7 bill, 3.6 bill, and 4.2. Over the last 5 years is increased significantly. It's increased by 10, 20, more than 20, like 45% increase. 2016 to 2017 wasn't really a great year, as you can see. It's gone down almost 10%. Nothing major. 2018, good year. It's gone up. 2019, an amazing year as well, and 2020, another good year. Free cash flow, return on capital, total shareholder return, net debt. Okay, this is important. We always need to know a company's debt. This is important. I'm just going to put that purple. Alright, so debt in millions, they have 5.1 billion in debt, which then dropped down, which is good. You know, you can use debt to acquire assets, invest in your operations, and invest in innovations. There's nothing wrong with that, but you need to look at the percentage of the debt to their revenue, to their assets, to their net income, how many years it will take to pay off, could they get bankrupt? You need to know this type of thing. So 5.1 billion in 2016. Okay, I need to work out some numbers to compare it to, like their net and whatever. So they could manage to get rid of like a lot of debt in 2017. 2018 they got rid of more debt. 2018 to 2019 the debt went up ridiculously amount. That's gone up by 600%. Now they're slowly working off the debt, but I'm a bit worried that look how much debt they put there. Let's look at the revenues increase. What is it? I mean, the profits only went up by profits. Where is it? Let's go to revenues actually. So the revenues only went up by 6 billion. Yeah, group revenue 6 billion, but they've managed to increase their debt by like 9 billion. So in that year they increased their debt more than they increased their revenues. That's actually, you think if you got in an extra 9 billion into debt, that you've used that money towards more revenue to get like more revenue. Bit worried. That's a bit worried how much debt that is. I want to compare that figure to revenues. sorry, not revenues, profit. Profit before taxation 1.6 billion. 1.6. 1.6 billion. That's before tax. After tax is 1.2. That's making it even worse. So 1.2. We're going to calculate actually. Hold on. Of course, their revenues and profits and all this stuff can change. Let's just get a calculator. Give me a second, people. Calculator. What was it? 1.270. So 1,000. 1.2. So that's basically millions. Yeah, that's millions. And this is also in millions. Jeez. Alright, let me do the number. Sorry, let me do the math the other way around. To make it a little bit more simpler. 13,204. Divide that. So this basically we're dividing by net debt by a profit in 1 year. So got 1.270. 1.270. Alright. So this number you're going to see on screen is how many years it will take if you have the same revenues, the same expenses, the same everything. 10 years to pay off their debt. And I think that's a lot of debt they have. That's a bit worrying. 10 years to pay off their debt. I mean, most people pay off mortgages in 40 years, and you can compare it. I think there's a fair bit of risk, but with risk there is always a reward. But you can see that the year afterwards it took off what? $1 billion in debt. They took off $1 billion in debt. So let's compare that to get a more accurate number. Alright. But remember that 10.39 years. Anyway, let's work out what 2020, since that's the last year we have information for. Divide that. Profit for the year 937. Oh gosh. Alright, so they're going off 2020. It's going to take them 12 years to pay off the debt at this rate. 12 years. Unless they increase their revenues, their gross revenues, their net profit, pay less in taxes, spend the same in operations, gain more revenues or whatever, at this same rate it's going to take them 12 years to pay off the debt. And if that number increases, so if their net profit goes down or their debt goes up, that number is going to take longer and longer to pay. And you know, one of the easiest ways for a company to go bust is through debt and bankruptcy, like literally. So you know what? There is a fair bit of risk. Like the debt can't be paid off in like 2-3 years. Like it's not short term. That's some long term debt they got over their heads. I mean, they could always sell assets. They could always but they probably don't want to sell. They probably just want to keep growing, in it. But they need to be careful with that. I'm gonna write that down. So it's gonna take 12.63 years to pay debt at the same rate. Alright. That's net debt, that's not even gross debt. Well, total indebtedness, which is even more, which is 14.8. So it's even longer than that, realistically. Enterprise value. Let's find out. What is enterprise value? I think that just means like how much are they worth. Enterprise value is a measure of the company's total value, often used as a more comprehensive alternative to equity market cap. EV includes in its calculations the market cap of a company, but also short-term and long-term debt. Alright, cool. That's a good number we need because we want to work out how much a share should be worth. Alright, so bear in mind, company's worth 34.6 billion, yeah? 34.6 billion. I don't know if one done that. No, alright. How many shares of Tesco? How many shares does Tesco have? 7.73 billion. I said the market cap is 17 billion, but enterprise value says it's 34. Wait, so you're telling me it's worth 30? Oh, okay, we need to work some things out because this sounds like it's on a discount right now. If the company's worth at 34 billion, but the market cap is 17 billion, but then bear in mind it does have a fair bit of debt over its head. A fair bit of debt that it needs to pay off. I mean, if the market cap's 17 bill, but their debt is, what, 14 bill? Yeah, their debt's like 14 bill. Pretty funny, it's only 12 in the afternoon, I'm tired. Enterprise value. That's just interesting, you know. So the valuation is 34 billion, but the market cap is 17. Alright, hold on. Just need to quickly Google something. Oh wow, we opened big. No one wants to see that. Tesco valuation. Let's see. So we got 17.64 market cap. Net worth. Tesco's worth 21.06 billion, despite controlling nearly 27% of the UK. That's good. We know it controls a quarter of the UK grocery market. Competitors. Sainsbury's, Aston Morrison's. Alright, let's go on this website. Tesco's current valuation analysis. Current Tesco Plc current valuation is 36. So they currently value it at 26.9 billion, but the enterprise value is 34 billion. It's like a difference of what, 8 billion, which is like 25%. Oh, this site looks like it has everything on now. Alright, we might go through this in a bit. 1 second. You can close that. It's a lot of numbers to take in, people. A lot of numbers. This is the official numbers of stores. To the, literally to the dot. Oh wow, they find employees. That's the one thing we're gonna look at. Yeah, they're cutting costs. That's good. That's good. But yeah, so if there's 7, we're gonna work it out for the different valuations because we can't work out for one valuation. We want to have a range of valuations. So 7.7. I'm just trying to think what the formula would be. Okay, cool. I think I have an idea what to do. Alright, let me get a calculator. Give me a sec. Calculator. We should actually just keep the calculator on screen, shouldn't we? 3, 4. 34676 if I'm right. It was, yeah, 34676. And then we got divided by the, wait, it's like millions, right? Yeah, that's in millions. So we need to do that in millions. So 7730. 7730. Is that how much Tesco's is really worth a share? £4.48. What's the current price of Tesco's though? Tesco's stock. Well, that would be in pennies. So 448 pence, £4.48. Is it really worth that though? Has it ever been worth that? Yeah, it's been worth that before. Sure. 448. When's the last time it's been 448? Going back. 2013. Yeah, that kind of makes no sense. Yeah, they've got more debt, which is more risk, which is maybe why investors are a bit turned off. But that's kind of down, it's down like 50% over 9 years. 9 years. Alright, cool. So that might be one price it might be worth. Let's write that down. Gonna write that down. Give me a second. Sorry people. So valuation of 34,676 shares of, that's how much the shares should be worth. 448 equal 448 pence a share. What's the other valuation? 26.9 bill. Because we were on conservative estimates as to. So what? 20. So 26 billion 773 7730. Cool. Valuation of 26.900 billion equals 3.7, so £3.47 pence per share, which means let's check the. When's the last time it's been £3.47? Oh, it's gotten close around 2020 and August 2019. Hasn't been there for a while actually. 2014, crap. Hold on, let's go to a 5-year chart, it might be a little bit more accurate. Nope, we really have to use a max chart. So about 2014, so we're going to put 2014, what was it, 2014 August or was it July? Let's just double check. Alright, so 2014 July was the last time was that price. Let's ignore that. Let's ignore that. Cool. And as for 44, okay. Trying to get it as close to the dot as possible. Okay. 15th of November 2013. Cool. 2013 November. Was it 13? 5th of November. Cool. If I keep looking that way, it's because there's a monitor out screen, so don't think I'm just like looking at how am I looking at this? Cool. What's the other valuation that came up? There's like a really low valuation. So we got that valuation. I'm gonna keep that aside. Market cap 17%. That's really low though. Even that there might be a better. Let's find out what it's worth though. Valuation of 17.25 billion equals. Guys, this is what your DD is. This is the first time doing DD properly. I'm gonna be honest with you guys. I've done partial DD, but not to this extent. And all this information you can see is public. I'm not using a Bloomberg terminal. I'm literally just using Google and questioning stuff. So, our valuation of 17,250 mil. I'm gonna divide that by how many shares they have. 7730. So we have a final answer of 223 pence a share. Alright, so we've got two different answers. Let's look at where that is on the chart. 5 days. Bear in mind, it did just do a share consolidation, so I don't really know if those numbers would be included in the share consolidation or not. So with the share consolidation or not, because that actually makes a difference. Shares traded, yeah, cool. This is the Financial Times, I believe. Just got an annual dividend of 5.51%, which is quite good. It's had its last payout on 27th of November, so probably not enough one until like summertime, June. Yeah, the outstanding shares is still 7.73 billion, but it did go for, wait, I wanted to be sure, because it did have a share consolidation. So if there's less shares in the market, then that means the shares are worth more than those numbers I've just given you. How many shares does Tesco have after consolidation? Alright, cool. As a result of the government guidance in relation to COVID-19, the general meeting concerning the proposed payment of a special dividend and associated share consolidation was held at 10:30 on Thursday, 11th of February 2021 at our Wellwyn Garden City campus with a minimum quorum of shareholders present. Alright, cool. Shareholders question, special dividend, no, share consolidation. Alright, so they did a share consolidation. How many shares was there? We'll have the existing shares. We'll receive 15 new shares. These new ordinary shares will have a nominal value of 6 1/3 of a pence and shall continue to be traded as they currently are. An example of this, the cool. What if as set out in the circular, any shareholders holding only one existing ordinary share will no longer hold any shares of Tesco's. Imagine you only had one share in Tesco's, it's only like £2. Following no consider, I don't think anyone would, you don't invest £2 into a company, come on guys. Will cease to be shareholders. You know what, that's actually an easy way to become like, I just thought of that, like, that's an easy way to get rid of shareholders. If you don't qualify because you don't have enough shares, it's an easy way to like work your way up. I mean, if you had 5% and they kicked out 1% for not having enough shares, you kind of look like you earn more, even though there's some outstanding. Well, free float, should you say. I don't know how many shares are left. Because I don't want to know if that, I want to know if that number of 7.73 billion is after or before. Tesco PLC. Is that included? I don't know if that's included. If any of you know, I beg you put this in the comment section. We're just going to go through this and hopefully find one that has the date listed on the site. Alright, let's go through this. Yes, as of 9, yeah, that's perfect, that's perfect, perfect. This is the website I want to open. Come on, CEYO. Fund Insider, or Funds Insider. Shares 229, I can say currently that's kind of accurate, it's like a penny off, but bid offer as of market cap. That's another, every place is giving us different market caps. Actually, that might be the right answer, you know. Look, we've got the exact amount of shares, that's exactly what we needed. Dividend yield 5.17%, IP ratio 17.73, cool. There's a FTSE 100 market. Got news on Tesco's, it comes out like every other week, looks like. Numbers of shares out says 9.7 billion. Yeah. What was the previous number we had? Let's go to, what was it? I'm going to duplicate this tab. Google. How many shares of Tesco does Tesco have? 7.73 bill. It says 9.7. Because they did do a share consolidation. So that might be the old number. How many share? Let me go. What was the Tesco's? It was 15 to 19, no? Tesco's share consolidation 2021. What will happen to my existing Tesco shares? Alright. I want the fucking fraction. Alright, cool. Will this explain it? Alright, so every 19 shares you had, you're getting 15 shares at higher value. As part of a divestment, Tesco's also commenced a share consolidation through which will assign 15 new ordinary shares with a nominal value of 6.33 pence for every 19 existing ordinary shares. Okay, so you want to use a ratio calculator to get some. But I'm gonna write. Where was the website where I saw a different market cap for Tesco's? This website. So it says market cap is. I'm gonna work that one out as well with the old number. Valuation of Tesco's. Got 22.441 billion. No, so we're going to use the old number again. 22441. Where is it? Look how many tabs I have open. How many shares does Tesco have? Okay, not Tesla, Tesco. Okay. 9 point, yeah, it's given us this number now. Interesting how we had a different number before. Yeah, that's the number we had before. Let's do by that number. Divide by 7.3. Yeah, cool. So I'll make it 290 pence a share. 290 pence a share. That's before all these numbers. So, valuation of 34.676 billion is valued at 448 pence a share. Our valuation of 26.9 billion is valued at 347 pence a share. Valuation of 22.441 billion is valued at 290 pence a share, and a valuation of 17.25 billion is valued at 223 pence a share, which is kind of below what it's already at. So we're going to work out the consolidation prices. If it's going off the low end, if it's at its current valuation and the price is the same, then pretty much Tesco right now, I'm not a financial advisor and this is not financial advice, but it's fair value. From what I'm seeing, it's pretty much more or less fair value, but we're going to work it out. But bear in mind, there is a lot of risk. The Central Europe operations don't look amazing. Their debt is ridiculously high and will take them time to pay off. With their bank, they have issues with their profits or something. We went through it earlier on, but there is a few causes of risk, and this, yeah. But there is loads of positives, like they're increasing their dividends now the last 3 years, which they bought back. They've increased their stores to a ridiculous amount. I mean, the amount of stores they have, second most supermarkets in the United Kingdom. 3,443 stores. 25 or 27% of market, like the gross market cap in terms of stores. Okay, so we're going to a ratio calculator. That gives us that. Wait, they announced actually maybe when actually let's just double check. When will Tesco's consolidate? Because I think they already done it. Consolidation happen. Jesus Christ, my typing is terrible, guys. Alright. So 12th of February, yeah, so it's already, yeah, so it went through on the 12th of Feb. Right, so the share consolidation price has already been done. That says 9.7. So we got 15 to 19. That's the share price consolidation, and it was 7 point, according to what was it, this Google statistic is 7.773. Alright, cool. 7.73 billion. So let's not put that decimal place. So that's in millions. How many shares? And this is in 9 7 9 3 5 0. So that we wrote this in billion, million, 100,000. So I use 5 zeros up in total. Cool. 2, 3, 4, 5 billion, 100 million, 100,000, and then okay, cool. Calculate. Interesting. Did I do too many zeros? Hold on. 300,000 million. Cool. Alright, let's get rid of this and just do calculate. Okay, so we haven't got the definitive number of how many fucking shares there is. But it is close to a 15 to 19. Well, at least it's given us like a specific answer. I mean, look at that. It did say it went for a share consolidation of 15 to 19, and the new amount of shares versus the old amount of shares. Because I'm confused how many shares there is. We're going to do it for the 9.7 billion. We're just going to work it out. If there is how many? Okay, 7.73 billion shares. Outstanding. Cool. I'm gonna close that. We don't need this anymore. Don't need this anymore. Don't need this one anymore. Alright, so we're going to do the same valuation. We're going to work out the shares for this amount of shares. If there is 9.793.5 million shares. Calculator. So we got a valuation of 34.676 billion divided by a valuation of divided by amount of shares, which is 9 billion 793 million 0.5. Alright, cool. Alright, cool. So that would make it 354 pence a share. Sorry, I'm just like editing a Word document right now. Cool. Is there any way to quick delete this and go back to the equation? Nope, I'm gonna have to do that. Cool. So if it's a 26.9 billion valuation divided by the 9.793 billion, We have 274 pence a share. Cool. Let's try 22.41 billion divided by 97935. So that would work out 229 pence a share. And finally, the low valuation of 17 point, well, no decimal place, 17.25 billion divided by the 9.793 billion outstanding shares. We have a very, very low price target of 176. Alright. So it depends on how many shares there is. If there's 7.73 billion shares, for the low valuation of 17.25 billion, it's worth 223 pence a share. From the very high valuation of 34.676 billion, it's worth 448 pence a share. From the low valuation of 17.25 billion, if it's 9.793.5 million shares. So basically, if that's the one with the 15th and 19th share consolidation, it's worth 176 pence a share, which is way lower than what it's currently valued. I mean, it's valued at 2283 pence a share. Or the very high valuation of 34.676 billion, it's worth 354 pence a share. It kind of depends on the valuation and the stock split, whatever the new amount of shares outstanding is. That's for you to work out and do your DD. I'm just doing my DD here with you guys. Let's look at profit margins, why not? Close this ad. Tesco's profit margin is 2.09%. That's really, it's not the greatest, it's quite tight. You know, the supermarket industry is competitive, they don't make high profits because they have to do low prices, they've got so many other competitors, so that's why the supermarket industry is not really that profitable. Yeah, the revenues is crazy, and the number of profit, like the actual number of profit in the millions or billions, might sound great, but percentage wise, it's not the best return on investment, because you can see the profit margin is so tight. But remember, they do pay dividends. Which you might be interested in. That's giving us their profit margin. Well, kind of actually shows you all the stuff on the side here. Operating margin. We've got a current valuation of 26.9 billion. So I'm going to highlight that one right now. So if the current valuation is 26.9 billion, which sounds not too far off, I think that's fairly reasonable. Then it's worth 274 pence a share if it's 9.7 billion shares. Of the 7.7 billion shares, it's worth 347. Either way, at 274 pence a share, you can still make like a 15-20% return on investment. So that might be worth a thought, but you do need to like analyze it more. I mean, if you look at the stock price, you can see like the last 5 years, it's down 2.04% over the last 5 years. Last 1 year, it's down 27.64%. Year to date, 23.9%. 6 months, 20.53%. 1 month, 26%. 5 days. Hold on, why did not work? 3.99%. And today it's starting to go up. It's gone up by 1.78%. if you go over the max chart, which goes back all the way to 1995, interesting, it's up 120% over what? 26 years? 26 years, 120%. I think that's the greatest investment for 26 years. But if it was going to go back, let's say exactly 10 years, so we're looking at the 2011, doesn't matter whenever you bought in 2011, you'd be down a considerable amount of money, about 50%. So about 10 years, you were down 58%. From its all-time high, which was what, 2007? If I can get up there. It's not. Let me get to like the peak of the peak. Alright, we'll go from here. From its peak, it's down 62%. That's from 2007. And it's been growing its revenues, it's been increasing. So stock price has been falling down a lot. Remember, there was paying a hefty amount of dividends and increasing it over like the early 2000s. So like from 2000 to what, 2013 it was just increasing that dividend, increasing. And then around, what is it, 2017, they cut the dividend. So maybe that's when people lost interest. Maybe people lost interest around this period when they cut the dividend. Maybe. I think it's kind of an interesting stock purely because look, if you look at from 2014 to 2021, it's kind of been traded sideways from a low price of 191 to a peak price of 300. What's that, like 37%? Yeah. So it's been like, it's like, yeah, from the low to the high of the last 6-7 years. It's just been floating between there with like a base, I said not baseline price, but like a low price of like 210, 220 up to like a higher price of 280. So it's actually kind of at a lower price right now, so maybe it is a good buying opportunity. Maybe there's going to be a more of a dip, who knows? I mean, look at that big dip. From the 19th, dipped. I think that's to do with the share price consolidation though. If that's not to do with share price consolidation, I don't know. But I think it is. But yeah, no, I mean, if you're looking to get into Tesco's, maybe now might be a good time. Like I said, not financial advice. I'm not telling you to do it, not encouraging you to spend money, I'm encouraging you to do your own research and your own due diligence. Yeah, I mean, price-wise, that's interesting. Shares outstanding. So if we went off those two metric numbers, should be 274 pence a share. If we went off that, just a simple valuation of market cap divided by shares outstanding. Of course, there's more things to analyze to work out what shares are really worth, like hidden assets. Net income 1.32. Okay, total debt. There we go. So we've got a different number now. You have 1.32 billion in net debt. Your total debt is 7.2 billion. So if the net income's that and the net debt's that, they can pay it off in about 5-6 years, which is a little bit better than here in 12 years. The debt to equity is 49%. So what their debt is 7. So the valuation is 26 mil. Yeah, 26 mil. Remember that valuation is 26 mil. Where did it say that debt? Hold on. Debt to equity. So debt is how much they're in debt. Equity is what they own. Debt to equity is almost 50%. 50% is half. Double the number, you've got 14.5%, more or less, 14.54%. But the debt's a little bit lower, so the number's a little bit higher, whatever, cool. So their equity is like what, 14.5 billion. Current ratio, you got all of these metrics down here, number of employees, they got a lot, like a lot of employees. I want you to realise they almost employ 500,000 people. 500,000 people. Let's see how big of a role that impacts. How many people live in the UK? That one's gonna drop. Yeah. Alright, cool. According to this figure, we've got 66.65 million. That's 2019 though. How many employees does employees 2019, let's get that number. Oh hell no, I'm not signing up. I think maybe I saved it from earlier. Let me just double check my that's how many stores, market shares. Can't find that number. Alright, there it is. 450,000, fuck it, go with that number. 450,000 employees. I just realised I had it open there. So was it 66.65 million people in the UK. And what was the list of their employees? Oh, don't tell me I just deleted by mistake. Was it 450,000? Yeah. 0.45. Alright, that's not the right formula. Crap. I want to find out what percent. Let me go on a percentage calculator. That'll be a little bit easier actually. Percentage calculator. Confirm. Okay. So 0.450. Well, I don't need a 0. And 66.65. Calculate. Oh, that's what percentage. No, I don't want that. Sorry. We want this 0.4 go of 66.65. That's the number we want. I want you to realise Tesco employs a lot of people. A lot. 0.67% of the United Kingdom population. Tesco employs that. That's almost one. Think of that. 1%. 1% of the population of London, almost 1%, is employed. But I want to get that into a fraction. What's the? I want to get that into a fraction to give you a better number. Fraction calculator. Now, I don't want to add anything. Ah, gosh. I just want to know what that is. Simplifying fraction, that's what I need. 0.6751 6879 of 100. So that's that many percentage out of 100%. That's kind of not the number we wanted. Okay, let me delete some of the little decimals. Alright. That's a better number, there we go. It's a little bit random though. Of every 4,000 people, 27 of them are Tesco's employees. Think of that. Think of that. Let me divide that number because I want it out of 1,000 actually. So what was that? 27. We're gonna divide that by 4. Simple. 27 divided by 4. 6 3/4 of every employee. So 6. That's ridiculous. 6.75. Almost 7 people out of every 1,000 people in the UK is employed at Tesco's. almost 7 people out of 1,000 people in the UK is employed by Tesco's. So that's a high amount. I want you to think of that. Can you think of your company, whatever company you work for? My company would even be half of that fact. I'm not even joking. It'll be like 0.0001%, something like that. It's a really small company. Alright, I'm going to take a little break, guys. We're going to come back, do a little bit more DD another day. But anything you found out about Tesco's, leave it in the comments. Leave it in the comments down below. Chat with each other. Explain what things you found out about the company, any insider information you have. Share it. Why not? Why not?